first things first. South Africa, my perception has been, and having invested there in the past, it's a difficult place to do business. Is that the case?
Well, I mean, we're based in South Africa, so we live and breathe the country every single day. About sort of 70%, 65% of our investors are South African, 35% are in the UK and elsewhere. So yes, I mean, there are challenges in South Africa, but I think what we have come to realize, and certainly what investors have realized, that Africa generally can be challenging. But the benefit that we have in South Africa is we have an established culture of mining. So we've been mining in this country for about 140 years. We have well-established infrastructure. So we have power, we have water, we have technical skills. So we don't have to sort of fly in skills or try and source skills from elsewhere when we have an issue on the operation. We have good roads leading to all of our mines. Evander is about sort of an hour from the international airport on a world-class highway. Barberton is very close to the Kruger Safari Park or Kruger Game Reserve. Also, you've got an easy place to get to. So, yes, I mean, South Africa has challenges. I think that the new government is also trying to address a lot of the uncertainty around let's call it legislation. There's a new mining charter. So overall, I think we have a demonstrated ability to actually operate successfully in South Africa. And, the rest of the continent, certainly if you sort of take what's happening elsewhere, it's clear that you need sort of dedicated, focused expertise, the ability to operate in country, and then you can run your business successfully.
You've built up quite a successful company. You're producing 170,000 ounces. You've got a reasonable market cap here on AIM. But has it been all plain sailing? I mean, what are the challenges you've faced over the last, say, year, 18 months?
Sure. Well, I mean, I'll be first to say it hasn't been plain sailing. And, one of the sort of worst things or most difficult things we had to do is we had to close one of our underground operations at Evander, or rather the large-scale operations, just because it was too high cost.
Right.
So, we had to retrench 1,800 people. We did so in pretty much record time, which again, demonstrates that you can do business and restructure your business in South Africa. So, I mean, we did that, and at the same time, we brought into production our new plant, Elikhulu, which is a really low-cost, long-life producer. So, with all that said and done, I mean, we sort of have reduced our all-in sustaining cost to something that's internationally competitive, $975 at last count at our interim results. So yes, it's not plain sailing, but we have a good team of people. We're very focused. We know on what we need to get done. And that's really sort of that's what we do, is we make sure that we manage our business properly.
Yeah. Mining's a tough space. There's a lot of things that can go wrong on a daily basis, and I guess it's putting out small fires before they become big fires.
Yeah, and sometimes putting out big fires, but again, we have an experienced team. I think we have a demonstrated track record. So we've become used to our environment.
Okay, well, let's get into the projects, because I think it's going to allow us to talk about some of the specific elements that if my investor hat on, I'm looking at. So let's kind of again set the scene for people. You've got two assets. You've got Barberton, which is both tailings and underground mining, and you've got Elikhulu, which, as I understand it, is tailings plus there's an expansion program on that as well.
Sure, and then we have some near-term projects at Evander also.
Yeah, and again, we'll get onto those because I think you mentioned them at the back of your presentation, which I'd like to understand in terms of how this thing keeps going or how it grows. Okay, so tell us about Barberton, because again, you say it has had issues, but you've addressed those. So why don't you talk to that?
Sure. So Barberton is a very interesting operation. It's one of the oldest running mines in the world. They started operations in 1886 at a mine called Sheba. So we do about 80,000 ounces at Barberton from underground, and we do about 20,000 ounces from our surface tailings retreatment business. So in total, about 100,000 ounces.
And was that what you expected? Sorry, was that what you expected it to be? I mean, what was the life of mine on the underground component?
The underground life on the richest section which we're mining at this point is 20 years. It's the MRC ore body at our Fairview operation. So it's a long life.
And does it run at the same
operation.
rate? Does it run at the same rate in terms of 80,000?
Well, it's not going to run at exactly the same rate, but then, we're obviously busy with a number of ongoing exploration efforts to extend the rest. But let's call it the as we say, the anchor ore body.
Right.
Is the MRC. It gives us more than 50%, 60% of our underground gold, and that currently has a life of 20 years. It's incredibly rich.
And is it at 10, the 10 gram number you mentioned?
So
earlier?
the overall Barberton produces at 10 grams a ton. The MRC ore body, Fairview, is actually a lot richer. You can probably sort of use 25 grams a ton on average. We use a cutoff of 100 grams a ton when we do our estimates in terms of resources and reserves.
Wow.
So it's exceptional, yeah.
So what's the AISC for Barberton then? It must be quite reasonable.
Well, the AISC for the underground is at this point higher than what we would like it to be.
Which is?
It's profitable, but the AISC is in excess of $1,100 for the underground. Now, the reason for that is that there's an awful lot of infrastructure, and we've been mining for 130 years, as I've said. So there's a lot of infrastructure that you need to maintain for relatively low level of production from a tons perspective. So certainly what we've said to the market, and it's well publicized, we have a number of initiatives ongoing to actually reduce the cost of our underground operations at Barberton, which from a group perspective is the highest cost business in our group. It's still quite profitable. It's long life, but it's higher cost than what we would like.
So what are you going to do? How are you going to fix that problem?
Well, we have a number of infrastructure projects specifically at the Fairview mine. So there's a sub-vertical shaft that'll allow us more access to the ore body, get our guys down faster, allow us to hoist more material, do more development. So that's a key area of focus. And then we have a number of other projects at our Sheba operation where we're looking at Royal Sheba to also increase production and bring down costs.
Right. Okay. But Barberton, as it stands, high AISC, low margin, but profitable, and the tailings component supplements that. But how much tailings are there? I mean, how long does that run for?
Yeah. So the current life of the tailings plant at Barberton is in the order of 10 years.
Okay.
That's the BTRP. So it's also substantial. Currently we can. So if in terms of, just to correct you, the all-in sustaining cost AISC at Barberton as a whole is quite attractive. As you've said, the underground is higher cost, but what I do believe is there's a lot of scope for us to go and bring down that cost. So on a weighted basis with the tailings, the business makes quite a lot of money.
Okay, but so what are you aiming for? So you've told us what the AISC is. What are you aiming for in terms of that margin?
I think so. The other interesting thing from a South African perspective is that we produce in rands.
Yeah.
So it's very dependent on what the dollar-rand exchange rate does. All our costs are rand based. But yeah, ideally we'd like to get I'd like to get the Barberton underground down to, let's say, well below $1,100. That would be a good achievement.
That could be any number of things.